What is going on, crypto world? Welcome back to Bitcoin Bulletin, where we break down the biggest stories shaping the future of digital assets. The pace of change is absolutely electrifying, and if you're not plugged in, you're missing out. We've got a packed show today, with updates that could redefine how we think about digital currency and its place in the global landscape. From geopolitical strategy to the subtle shifts in institutional demand, the market is buzzing with activity. Get ready because you're about to get the inside track on what truly matters. Let's dive in. First up, we're going deep into El Salvador's bold Bitcoin experiment. What have they learned, and what does it mean for global strategy and investment? This is more than just a headline. It's a real-world test case with implications we all need to understand. The early results are in, and they're painting a fascinating picture of adoption and challenge. Then, we're tracking the quiet but powerful buildup of institutional demand for Bitcoin. The numbers are starting to tell a story, and some analysts are pointing towards a massive rally, with targets as high as $120,000. Is this the moment the big players make their decisive move? We've got the data that could signal a major shift. We're also looking at a significant strategic play in the crypto IPO surge as Gryphon announces its merger with American Bitcoin. This is a move that could set new benchmarks for how digital asset companies enter the public markets and what it means for the broader ecosystem. The details are complex, but the potential impact is huge. And finally, get ready for the Nasdaq debut of American Bitcoin, backed by none other than Donald Trump. This high-conviction play is being framed as a direct bet on Bitcoin accumulation and the unstoppable wave of institutional adoption. What does this high-profile listing mean for the market? We've got the breakdown. You don't want to miss any of this. Hit that subscribe button, ring the notification bell, and let's get started. El Salvador's Bitcoin bet, a global strategy checkpoint. El Salvador's pioneering adoption of Bitcoin as legal tender continues to be a focal point for economic strategists and investors worldwide. This ambitious experiment offers a unique lens through which to examine the practical application of digital currency in a national economy, revealing valuable lessons for geopolitical strategy and investment approaches. The nation's journey with Bitcoin is not merely about adopting a new technology. It represents a significant recalibration of its financial sovereignty and its position on the global economic stage. From the outset, El Salvador's move was lauded by proponents as a bold step towards financial inclusion and a way to escape the traditional financial system's constraints, particularly for remittances. However, it also invited skepticism regarding its economic stability, the volatility of Bitcoin, and the practicalities of its implementation. The initial phase saw significant investment in Bitcoin infrastructure, including the development of the Chivo wallet and the issuance of Bitcoin-backed bonds, known as volcano bonds, though the latter faced delays and adjustments. The government's strategy involved direct purchases of Bitcoin, integrating it into public services, and promoting its use among citizens and businesses. The lessons learned are multifaceted. Firstly, the volatility of Bitcoin presented immediate challenges, requiring sophisticated treasury management and clear communication strategies to mitigate public concern. El Salvador's experience highlighted the need for robust risk management protocols when incorporating highly volatile assets into national reserves. Secondly, the adoption of Bitcoin has spurred innovation in financial technology within the country, fostering a nascent digital economy. This includes the growth of Bitcoin-related businesses and services, from payment processors to educational platforms, creating new economic opportunities. Geopolitically, El Salvador's stance has positioned it as a leader in digital asset adoption, influencing discussions in other developing nations seeking alternative financial frameworks. It has also drawn attention from international financial institutions like the International Monetary Fund, IMF, which has expressed concerns and offered guidance, reflecting a broader global debate on the regulation and acceptance of cryptocurrencies. The country's ability to navigate these international relationships while pursuing its digital currency agenda is a key aspect of its evolving geopolitical strategy. For investors, El Salvador's Bitcoin experiment offers a case study in the potential rewards and risks of early adoption in a sovereign context. It demonstrates how national-level decisions can impact both local economies and the broader cryptocurrency market. The long-term success of this strategy will likely depend on sustained political will, effective economic policies, and the continued evolution of the global regulatory landscape for digital assets. The ongoing analysis of El Salvador's Bitcoin journey provides critical insights into the future of digital currency integration in national economies and its implications for global investment. Audience impact. This bold move has sparked intense debate among financial experts and the public, with many watching closely to see if El Salvador can successfully leverage Bitcoin for economic growth and financial autonomy, or if the inherent volatility poses too great a risk. But what happens when the market consolidates and whispers of a major surge begin to echo through the trading floors? Stay tuned as we break down the institutional demand building for Bitcoin and what it means for its price trajectory. Bitcoin on the brink. Institutional demand signals $120K rally potential. Bitcoin is currently showing signs of a potential significant rebound, with analysts suggesting a push towards the $120,000 mark. This optimistic outlook is underpinned by a confluence of factors, including robust institutional demand, favorable on-chain metrics, and stabilizing derivatives market conditions. The narrative is shifting from speculative frenzy to a more measured, accumulation-driven phase, suggesting that the digital asset may be undervalued and poised for sustained growth. The primary driver for this bullish sentiment appears to be the persistent inflow of capital into Bitcoin exchange-traded funds, ETFs, and a notable decrease in the amount of Bitcoin held on exchanges. JPMorgan's analysis highlights that shrinking exchange reserves are a strong indicator of accumulation, as investors are moving their assets off centralized platforms and into self-custody or long-term holding, reducing the immediate sell pressure. This trend, coupled with steady ETF inflows, signals a growing institutional appetite for Bitcoin as a store of value and a potential inflation hedge. On-chain data further bolsters this view. The market value to realized value, MVRV ratio, a key metric for assessing Bitcoin's valuation, stands at 2.1. This figure is significantly below the levels typically associated with market tops, often above 3.5 or 4, indicating that Bitcoin is not in an overbought territory and has substantial room for appreciation. Similarly, the network value to transaction, NVT ratio, which compares the market capitalization to the value of transactions processed on the blockchain, has seen a considerable drop. A lower NVT ratio, currently around 23.7, suggests that the network's utility is growing faster than its market capitalization, implying undervaluation and strong underlying fundamentals for sustainable growth. Technically, Bitcoin's price action also supports a potential rally. The cryptocurrency recently found support around the 0.618 Fibonacci retracement level, approximately $104,000, and bounced back. The Relative Strength Index, RSI, a momentum indicator, is hovering near 37, which indicates a decrease in selling pressure and suggests that the asset is approaching oversold conditions. If Bitcoin can maintain its footing above the critical $104,000 to $108,000 support zone, it could pave the way for upward movements towards $112,000 and ultimately the $120,000 target. A breach below $104,000, however, would signal a potential test of the $100,000 psychological level. The derivatives market is also painting a picture of reduced speculation. Trading volumes in Bitcoin futures have cooled, and indicators like the bubble map suggest a decline in leverage and speculative intensity. This environment is conducive to more organic price discovery and reduces the risk of sharp, liquidation-driven price swings. Institutional players, who often operate with larger capital and longer time horizons, can take advantage of this stability to build positions without the disruptive impact of excessive leverage in the market. Audience impact. Market participants are keenly observing these developments, with many traders and investors anticipating a significant upside move if key support levels hold, while also emphasizing the importance of risk management in navigating potential volatility. But beyond the price charts and institutional flows, significant strategic shifts are happening in the corporate world of crypto. Next, we'll explore a major merger that could redefine the landscape of crypto IPOs. Gryphon and American Bitcoin unite, a strategic power play in the crypto IPO arena. A significant development in the burgeoning crypto IPO market is the announced merger between Gryphon and American Bitcoin. This strategic consolidation represents a major move by two entities aiming to capitalize on the increasing institutional interest and public market appetite for digital asset-focused companies. The union is poised to create a more formidable player, potentially setting new precedents for how cryptocurrency firms approach public listings and capital raising in a rapidly evolving financial ecosystem. The rationale behind this merger appears to be a calculated effort to leverage combined strengths and market positioning. Gryphon, known for its strategic investments and operational expertise, joins forces with American Bitcoin, which has been actively involved in the Bitcoin ecosystem, including its role in facilitating institutional adoption, and potentially through its association with high-profile figures in the financial and political spheres. This synergy aims to create a more robust entity, capable of navigating the complexities of the public markets, while capitalizing on the growth trajectory of Bitcoin and related technologies. This move comes at a time when the crypto industry is experiencing a surge in IPO activity, driven by the increasing mainstream acceptance of digital assets and the desire of traditional investors to gain exposure to this sector. Companies like Coinbase have paved the way, demonstrating the potential for significant valuations. The Gryphon American Bitcoin merger is likely intended to position the combined entity favorably within this trend, offering a more comprehensive investment opportunity that spans technology, finance, and digital asset infrastructure. Key details of the merger likely involve the exchange of shares and the integration of management teams and operational strategies. The combined company is expected to pursue a strategy focused on Bitcoin accumulation and broader institutional adoption, aligning with the market's current sentiment. This could involve expanding services related to Bitcoin mining, custody, investment vehicles, or other ancillary businesses that support the Bitcoin ecosystem. The goal is to build a diversified yet focused business that can capture value across multiple facets of the digital asset market. Furthermore, such mergers often aim to achieve economies of scale, reduce operational redundancies, and enhance capital efficiency. By combining resources, Gryphon and American Bitcoin can potentially accelerate their growth initiatives, invest more heavily in research and development, and strengthen their market presence. The financial implications are also significant, as a successful merger could lead to a higher valuation upon public listing, attracting a wider pool of investors. The broader context for this merger includes the increasing regulatory clarity surrounding cryptocurrencies in many jurisdictions, which, despite ongoing challenges, provides a more stable environment for long-term planning and investment. The persistent interest from institutional investors, including hedge funds and asset managers, in allocating capital to digital assets, further validates the strategic importance of such consolidations. Audience impact. Industry observers and potential investors are keenly watching the integration process, anticipating how this strategic alliance will influence the competitive landscape of crypto IPOs and the broader digital asset market. And speaking of high-profile market debuts, a particularly notable listing is making waves, directly linked to a prominent political figure. Get ready for the details on American Bitcoin's Nasdaq debut and its connection to Bitcoin accumulation. Trump-backed American Bitcoin lands on Nasdaq, a high-conviction bet on BTC adoption. The financial world is abuzz with the Nasdaq debut of American Bitcoin, a company whose listing is notably backed by former President Donald Trump. This high-profile entry into the public markets is being framed as a significant endorsement of Bitcoin accumulation and the ongoing trend of institutional adoption within the digital asset space. The backing by a prominent political figure adds a unique dimension to the company's narrative, signaling a powerful alignment between traditional finance, political influence, and the burgeoning cryptocurrency sector. American Bitcoin's strategy appears to be deeply intertwined with the growth and mainstream acceptance of Bitcoin. The company's business model is reportedly focused on accumulating Bitcoin and providing services that facilitate its broader adoption by both retail and institutional investors. This could encompass a range of activities, such as holding Bitcoin on its balance sheet, offering investment products tied to Bitcoin, or developing technological solutions that simplify Bitcoin transactions and management. The Nasdaq listing itself is a testament to the company's ambition to operate at the forefront of the digital asset revolution. The association with Donald Trump is particularly noteworthy. Historically, Trump has expressed mixed sentiments towards cryptocurrencies, but this endorsement suggests a strategic shift or a focus on specific business ventures within the crypto ecosystem that align with his economic vision. For American Bitcoin, this backing provides a powerful narrative and potentially broadens its appeal to a diverse investor base, including those who may be drawn to the intersection of politics and finance. It positions the company as a high-conviction play, implying a strong belief in the future value and utility of Bitcoin. The implications of this listing extend beyond American Bitcoin itself. It signals a growing acceptance of digital asset companies on major stock exchanges and suggests that political figures may increasingly engage with or support ventures in this space. The market will be watching closely to see how American Bitcoin performs, as its success could encourage further investment and innovation in the crypto sector, potentially influencing regulatory discussions and the overall trajectory of institutional adoption. Furthermore, the company's focus on Bitcoin accumulation aligns with broader market trends where digital assets are increasingly viewed as a legitimate investment class. As institutional players continue to allocate capital to Bitcoin, companies like American Bitcoin that are structured to capitalize on this trend are likely to attract significant attention. The Nasdaq listing provides the company with access to substantial capital, enabling it to execute its growth strategies more effectively, whether through acquisitions, technological development, or market expansion. The broader economic context, including inflation concerns and the search for alternative investments, also plays a role in the attractiveness of Bitcoin-centric companies. American Bitcoin's positioning as a play on this trend, amplified by its high-profile backing, makes it a compelling, albeit potentially volatile, investment opportunity. The company's ability to navigate the regulatory landscape and deliver on its promises of Bitcoin accumulation and adoption will be crucial for its long-term success. Audience impact. This unique listing has generated considerable buzz, with discussions ranging from its investment potential to the broader implications of political figures engaging with the cryptocurrency market. And that wraps up our deep dives into today's market-moving stories. Get ready for a rapid-fire recap of everything we covered. And that's a wrap on another action-packed Bitcoin Bulletin. We covered El Salvador's bold Bitcoin experiment and its strategic lessons, tracked the quiet buildup of institutional demand, potentially eyeing a $120K Bitcoin rally, explored Gryphon's merger with American Bitcoin in the crypto IPO surge, and broke down the Trump-backed Nasdaq debut of American Bitcoin as a high-conviction play on adoption. Don't miss out on future updates. Hit that like button, subscribe to Bitcoin Bulletin, ring the notification bell so you never miss a video, comment below with your thoughts, and follow us on all social media platforms to stay connected. We'll see you next time.